Enough is enough, a categorical message from the Finance Minister Arun Jaitley to the Congress party over the long-pending goods and services tax bill. In an exclusive interview with CNBC-TV18 Shereen Bhan, Jaitley did not mince his words on GST. So here are the top 5 highlights from that exclusive interview. The government will push ahead with the GST bill with or without the Congress in the next session of Parliament. He also made it very clear that all efforts will be made till the last minute to get the Congress on board to pass the GST bill. Number 2. Consolidation is the way forward for PSU banks. FM admitted that India has too many government banks. He also asserted that there is no change of plans to sell government stake in ITBI Bank and assured employee unions that they have nothing to worry about. Number 3, Finance Minister played down the rise in bad loan across banks in the third quarter. He said sectors like steel, sugar and power discoms, which are the primary source of bad loans, are seeing a recovery. And finally, the Finance Minister sent out a very stern message to the judiciary. He said drought management is an executive decision and not a judicial responsibility. Here is the Finance Minister speaking exclusively to Shereen Bhan.
You were quoted as saying that perhaps you will not wait this time around in the next Parliament session for the Congress to come on board. So can we expect that despite the Congress's support, you will push ahead?
If you look at the history of the bill, I have repeatedly said the Congress should have legitimately claimed the original authorship. Today, but for this 1% additional tax on interstate movement, my bill is identical to what Congress had introduced. 2 eminent finance ministers of the Congress party had approved it. Standing committee approved it. The select committee of Rajya Sabha approved it. Every political party in Parliament except the Congress is openly supporting it. It's therefore for the Congress to really introspect. I have tried all avenues. I have spoken to their leaders. Every session I am told come on the next session. Meanwhile, work has gone on. After all, this government has passed over 90 bills in the last 2 years. In the last session, I passed 24 bills. The only one held up really amongst the significant legislation is the GST. And therefore, having been passed by the Lok Sabha, having been approved and supported by every Congress government in the states, I think enough is enough. And therefore, the Congress party should really, I would ideally like to do it with consensus. I will continue to discuss with them till the last moment. After all, we are the government, it's our responsibility. Or otherwise, let the Parliament process decide. Look at each of the sectors which is responsible for this stress. For instance, the largest amount comes from steel. And steel had gone unchecked because of the influx of the Chinese steel coming into India. Now, with a series of steps which we have taken, more particularly the MIP that we imposed, coupled with the fact that global prices have also moved up, I think the steel industry over the last 2-3 months has started doing significantly better. And it's only a matter of time before they start servicing their interests. And once they start servicing their interest, I think this position is capable of a significant revival. Small sector from a larger banking point of view, but an important sector, sugar. Already the prices have moved up. The series of steps which have been taken, even global prices have helped. In fact, now they seem to be threatening the aspect of inflation. And I think the sector is now in a position much better as far as the NPAs are concerned. Highways has revived. Power sector with the Uday scheme, most of the state boards, their debts have been taken over by the state governments, and therefore as the bonds are sold in the markets, I think that itself will have an impact on the balance sheet. So you have simultaneously a lot of things which are happening, and I think the reprovisioning will show higher debt, higher losses as far as the banks are concerned. But a series of these steps, I think in the quarters to come, will also enable the banks to reverse a lot of these.
So when do you anticipate that reversal, sir? I mean,
I don't know. I can't make a generalized comment. It will depend on bank to bank. It will depend on the quality of their NPAs. It will depend on who the debtors are, which are the sectors which are involved. But if you look at the big picture, amongst the 5-6 sectors which are responsible predominantly for this stress, I can at least see bulk of them now moving.